Hi everyone and welcome back to my channel, Mile High Stocks. In today's video, I am going to be going over my top stock picks for tomorrow, March 11th, 2021. I have a lot in store for you today. I have a ton of stock picks, but before we get started, please go hit the subscribe and like buttons and be sure to turn on notifications to help me out with the YouTube algorithm. The first stock we are going to go over today is Zomedica Pharmaceuticals. Its ticker is ZOM. Zomedica is a pharmaceutical company that deals with animal health care. So what it is doing, it is developing products for veterinarians to improve animal care, as well as getting pets the proper care they need and veterinary treatment. Here's an article on why Zomedica could possibly hit $5 per share this year or even over the next couple months. But first, we want to know what the company is actually about. I told you before it is an animal healthcare company that helps veterinarians treat pets. So here's the article. Why $5 in Zomedica stock looks possible. It's important stuff for many of our four-legged family members, and this year Zomedica rocketing smartly higher. Is ZOM a worthy stock of a home in your portfolio? Let's see what's happening off and on the price chart, then offer a well-aligned risk management determination. So first off, they debuted their IPO back in 2017, and within a year, they had already hit all-time highs about $2.98. About a year later. The stock recently hit a delisting worthy 6 cents a share as recently as November 20th, but it has since picked back up. ZOM is up 725% to start the year, and that's after a pullback that began nearly a month ago. So if you were to buy Zomedica or ZOM right now, you'd be buying in the middle to end of a pullback. Still barely months into 2021. In February, the gain was as much as 1,165%. Trueforma, this is the product that could potentially launch ZOM stock all the way up to $5 a share. Behind the sudden excitement, ZOM is a nearby game-changing product that's already providing sustainable changes for its stock. At the end of March, the veterinary diagnostic company will begin a limited rollout of what's called Trueforma. Trueforma will be the first marketed point-of-care diagnostic platform capable of testing for thyroid and adrenal-related health issues in dogs and cats. As I said before, this is for veterinarians to improve pet care and animal health. Not only is this good news for our pets' well-being and pet owners' wallets, as less timely and more costly off-site lab results get the boot. The size of this market points towards a significant sales boom for Zomedica. And with that, incredibly good things for ZOM stock. Question is, how good for ZOM stock? Assigning a reasonable 15x sales multiple and 10% of the market, investor places Mark Hake recently laid out the case of ZOM fetching as much as $3.61 per share. Now let's take a look at ZOM's stock on the daily chart. As you can see, ZOM absolutely skyrocketed in 2021. You had an initial jump, and then you had a lot of consolidation, followed by a second jump up all the way up to nearly $3 a share. Now we're in the second pullback. You had the first jump, consolidation, second jump, second consolidation. We have critical support right around $1.45 a share. Because of this second consolidation, I am bullish on this stock for two reasons. One, you have the catalyst that I just spoke about in the news article with Trueforma coming out at the end of March. The second reason is the charting itself. Because of this second pullback, we could very well see a repeat of the first couple months in 2021. So because the stock skyrocketed, then we had consolidation and skyrocketed again, it is possible to believe that we could get a third jump up all the way to nearly $3.50 or even $5 a share. The next two stocks I currently have in my portfolio, they are XELA and ACIC. Let's start with XELA. A couple days ago, XELA currently received a $90 million contract for the next 10 years, which absolutely skyrocketed its price. And since it has dropped back down a little bit, I was able to buy the dip, and I'm currently green on this stock because I was able to get it under $4 a share. But because it skyrocketed so much and because of the news of this massive 10-year deal, I do think I could possibly get a 25, maybe even a 30% return all the way back up to $5 or even $6 a share. The other stock I have in my portfolio right now is ACIC, which is the special purpose acquisition company that could possibly merger with Archer Aviation in the next couple months. Now, special purpose acquisition companies do not go under $10 a share, and I was able to get in at this stock right around $10.75, right around that mark. I am currently green on this stock because it is currently over $11 a share now, giving me about a 1 to 2% profit, but I currently have a price target of $15 a share and potentially even $20 a share when the news comes out that they are definitely merging with Archer Aviation. The last stock I am looking at for today and the rest of the week is VUZI because it had a 20% gain today. So I'd like to see if we can get another pop tomorrow for a potential day trade or even a swing trade into later next week. Now I'm going to show you the daily chart for VUZI so you can see that it did have a 20% gain today and where its previous highs are. Thank you guys for watching my video. Please let me know in the comments below what you think about my stock picks, and I'd love to hear what your stock picks are for tomorrow. And if you have not done so already, please go hit the subscribe and like buttons and be sure to turn on notifications.